Okay, let's talk money, banks, and who's really pulling the strings.
It seems like a simple question, right? But the answer? Well, it's not what you'd expect.
And yeah, you might think the Fed, right? And you're not wrong. They literally print money.
But that's only part of the picture. The real secret? It's all about commercial banks.
This system is the secret engine that creates most of the money in our economy. So every time a bank makes a loan, it's actually creating new money. It just keeps multiplying.
So really, it's a three-way dance between the central bank, commercial banks, and, well, us.
So how does the central bank try to control all this? They've got a few key tools. First up is what they call open market operations. This is their number one most used tool.
Then there's the discount rate. Basically, if they lower it, banks are encouraged to lend more.
And a more recent tool, interest on reserves. Pay banks more, they hold more, shrinking supply.
So you can see how the central bank can either hit the gas or pump the brakes.
Okay, so it sounds like the Fed has total control, right? Well, not exactly.
Because banks can choose to hold extra cash, and we can choose to stash cash at home. A classic example? The Great Depression. People and banks got scared, and boom, money supply dropped 28%.
We saw this again after the 2008 crisis. The Fed went into overdrive to stop another depression.
And I mean overdrive. They pumped up the monetary base by an incredible 400%.
But look at this. All that new base money didn't really translate into everyday spendable cash.
So why not? What broke? It all comes back to what the commercial banks decided to do.
Instead of lending that money out, they just sat on it, holding massive amounts in reserve. And that's the key takeaway. The central bank has influence, for sure, but absolute control? Nope. So if the Fed has all the tools but can't guarantee the outcome, what does that mean for us?